This trading strategy is easy, but very powerful. In fact, this is the best trading strategy that any trader will ever watch on YouTube. At the end of this video, you will be able to make easy $500 daily on a small account and more on bigger accounts. This strategy will work for everyone, regardless of your years of trading experience. It does not matter if you're a beginner or a pro trader. All you need to do is follow all the rules and instructions carefully and pay attention to details, as I will be revealing them step by step. Follow it like a man looking for gold. You don't stop until you hit the gold. And the map to the gold has been pieced together in each part of this video. Do well to like this video, as it will help other traders discover this video and also become profitable. And subscribe to our channel if you are new here. So my tribe soldiers, let's get down into the business. The first step to this strategy is simply to understand the overall structure of the market. The problem a lot of traders face when trading the market is bowing to the pressure of the market. In their eyes, they see a lot of quick opportunities, and they begin to desire every single pip. They want to be part of every single move in the market. Their desire and greed controls them, but at the end of the day, they end up making nothing from the market. They are like Oliver Twist, they want more, but they never get anything. Now, when you look at this structure, what is the first thing that comes into your mind? Yes, a trending market. A simple trending market. This is all we need. Some traders will say they want to trade the ranges and the choppy markets, combined with the trending markets. That's a whole load of work and stress. That's fine for them, if they can keep up with the stress. But that road is narrow, and it leads to nowhere. The one and only way to make profits from the market is to stop taking what the market gives you and start focusing on what you want from the market. So for this strategy, we are only going to be using the trending market. If a particular chart is ranging or choppy, we leave it and focus on another trending asset. This is the foundation of this strategy, and you must know all this before we move on to really make everything easy for you. And now you might be thinking, but trading chief, identifying the trend is hard, and I don't know how to identify the right trending market. Well, that's why I am here for you, to simplify everything for you. And if you have any questions at all, at the end of this video, feel free to drop them in the comment section, as I will be answering them all. To identify the trend, all you need is this and this. You use this structure to identify an uptrend, and you use this structure to identify a downtrend. On the chart, this is what an uptrend setup looks like. And this is what a downtrend structure looks like. And once you identify these structures, the next thing you will be looking out for is a retracement. And please note, for this strategy, we are going to be ignoring small trending movements like this one. And we are going to place our full focus on the bigger trending movements like this one. The reason is because this movement is likely to give us more opportunities in the long run than with the smaller trending movements. And you will know more reasons for this as we progress into the next steps. After we have identified the trend setup, we wait for a retracement. This is when the market takes a little break from the former rally in order to gain momentum for the next rally. Our goal is to enter the market and partake in the next rally, since we already know the direction where the market is likely to be going to after the retracement. Now, we need a tool that will help us determine when to enter the market after the retracement, so we can be part of the next rally. This tool will give us our ticket to take part in the next rally. This is getting more interesting as we progress. So they are basically 3 steps to trade a market successfully. Identify a trend structure, wait for a retracement, and find an entry. Now, the entry part is the hardest part of all. This is the exact part that separates the winners from the losers. This is what makes a trader a pro trader, because it's hard to understand if the market is really retracing for a continuation or reversing to form a new trend. This is what brings a high level of confusion to a lot of traders. But me and my tribe soldiers will not be part of that confusion. For the entry part, we are going to be making use of the moving average lines, basically 3 exponential moving average lines. We will be using the 100 exponential moving average line, which will be presented in red color. Then the 50 exponential moving average line, which will be in green color. And finally the 25 exponential moving average line, which will be represented in a white color. Here is how we are going to use them. Pay close attention to this. We are going to be making use of the exponential moving average lines to get our entry after the trend retracement. And in order to do this correctly, we are going to be following some set of rules, step by step. First of all, we want to see a crossover of the moving average lines after the market starts making some price movements towards the target direction. So we will wait for the green and the white moving average lines to cross over the red moving average line. And I hope that you all can remember the exponential values of the lines by now. So in a downtrend, we want to see the green and white moving average lines cross below the red moving average line. And in an uptrend, we want to see the green and the white moving average lines cross above the red moving average line. When the crossover happens, we are more confident that the market will continue moving in our target direction. So that leads us to the next step, which is to wait for a little retracement to the white or green moving average line. I know by now you want to ask, what about the red moving average line? Okay, here is your answer. I said the white and green moving average line, because that will give us a more volatile and faster movement. When the market touches the white and green moving average line, it will give us a faster price movement than when it touches the red moving average line. So the market can touch only the white and green moving average line, but in all the touchings, it must not touch the red moving average line. When it touches the red moving average line, we cancel the trade and wait for another retracement to the moving average lines. Now it is important to note that we are only trading within the size or range of the trend retracement. If the market moves out of this trend retracement, we will no longer be looking out for any retracement to the moving average lines. But as long as the price is still moving within the trend retracement, we can be looking out for the right retracement to the moving average lines, through which we can enter the market. But how do we identify the right retracement, apart from avoiding the red moving average line? Because that will only solve half of our entry problem. How do we know that the market is ready to move after touching the white or the green moving average line? Well, that leads us to our entry candlestick, which is called the momentum candle. If you have been subscribed to my channel before now, you must have noticed how I love to preach about this candlestick pattern and some other incredible ones. But if these great entry candlesticks were to be my wives, this momentum candle will be my favorite among them all. So when the market makes a little retracement to the moving average line, we will be looking out for a momentum candlestick to appear, making sure that it has not touched the red moving average line yet. Take the red moving average line as a danger zone, where price is not allowed to touch before you take a trade. So, when the market retraces to the white or green moving average lines, we wait for a momentum candle to appear. And when it appears, we place our stop loss below the momentum candle and our take profit target at the high of the retracement. Then we wait for the market to hit our take profit target. Now, before I show you some more examples of this strategy at work, I want us to go through these steps again, in full combination. So the first step is to identify the market structure. The second step is to wait for a retracement. The third step is to wait for an entry, and that's where our moving average comes in. So the third step now is to wait for the moving average lines crossover. The fourth step is to wait for a little retracement to the moving average line. And the fifth and final step is to spot a momentum candlestick after the retracement, and after that, we can enter the trade and set our stop loss and take profit target at the right spots. So now, let's see another example of this on the chart. So here we can see that market is moving in a downtrend based on the trend structure, And after that we see the market making a retracement. And then, as the market began to fall again, see how the white and green moving average line crosses below the red line. And after that, we have this retracement, which was followed up by a bearish momentum candle. And because of that, we take a trade and place our stop loss above the bearish momentum candle, and our take profit target at the next low. And as you can see, this became a successful trade. Now, let's take a look at another example. So here we are in an uptrend. And how do we know that? That's because of this trend structure. So right here we have a trend retracement. And after that, the market began making some moves up. And that's when we begin to see a crossover on our moving average line. See how the white and green lines cross over the red line. And from there we spot a retracement, which was followed up by a bullish momentum candlestick. And after we have spotted this momentum candle, what is the next step? Of course, we take a buy trade, and then place our stop loss below the momentum candle and our take profit target at the next high. And as you can see, this became a winning trade, though in various cases, this could become a loss too, because no strategy is 100% accurate. But if you follow the rules that I have stated to the latter, you will find yourself becoming very profitable with this strategy. And I know that sometimes the price can retrace to the moving average line and not print a momentum candlestick and still move to the target direction. If something like that happens, don't worry, you should let it go. Do not break the rules to bow to the pressure of the market, and you should not desire every single move of the market. That is indiscipline and greed. It's like the story of the wise tortoise and the dog. I will keep the story short for the sake of this video. So the tortoise and the dog went to steal from the farm of a very rich farmer. And when they got to the farm late at night, nobody was there, so they began to gather their loot. The dog gathered a small and light portion of the harvest, but the tortoise kept gathering every single crop he could lay his hands on. Then, as the day was getting young, the dog told the tortoise to stop, so they can move out of the farm before the light of the day hits them. But the tortoise was still gathering more. He wanted more, and suddenly they started hearing some footsteps. The dog ran off with speed with his small loot, but the tortoise could barely move because of the weight of his loot, and so the tortoise was caught, stripped of all his loot, and severely punished. The same way, the market will punish every greedy trader with strong losses. Make sure to follow the strategy completely, and remember, it works on all time frames. And if you want to really upgrade your trading abilities the more, by trading with liquidity zones, which will really help you avoid a lot of stop loss hunts. This liquidity trading strategy will change the way you trade and turn you into a professional trader instantly. Make sure you follow us on Telegram to get my trading signals. We are the Trading Tribe, and it's a wrap for this video. See you in the next one.